We're at the Waldorf Astoria Hotel in New York City for REIT Week 2011 NAREIT's Investor Forum. Joining me is Ed Aldag, President, Chairman, and CEO of Medical Properties Trust, to talk with us a little bit about what's going on in the medical REIT sector. A lot of REITs in your sector focus on all different types of subsectors, but you are specifically focused on hospitals. How does that change how you run your business and strategize?
Well, Alan, when we put the company together, that was our strategy from the very beginning. So when you look at the management team, all the way from the very top, all the way to the very bottom, our people are people that came out of owning and operating hospitals. We actually understand how to operate a hospital. We could take any hospital in our portfolio and begin operating it with our management team tomorrow. So when we do our underwriting for any of our acquisitions, we're doing it as if we were doing a merger and acquisition of that particular hospital. So when you look at us compared to all the other healthcare REITs, our sole focus is on hospitals because that's what we know, and that's what we know very well.
And it's no secret that healthcare costs are about to start skyrocketing in the United States, as well as spending on healthcare. How is that impacting demand, and are you seeing enough supply to keep up with that demand?
Well, on healthcare costs, let's be sure that we understand exactly what we're talking about there. If you look at what individuals spend on healthcare, as a percent of our household expenditures, we're spending the same thing we were spending in 1989. But as you alluded to, and as we all know, the baby boomers now begin turning 65, and the average 65-year-old uses a hospital 8 times more than the average 18-year-old. So clearly we're going to have, as a country, a lot more money being spent on healthcare and a lot more need for hospitals across the country. When you look at our hospital delivery system in this country, we have a very antiquated delivery system. We really haven't had many new hospitals built over the last 50 years. So you're going to have an awful lot of hospitals that are going to need to be upgraded. You're going to have a lot of hospitals that are going to need to be built anew. Now, these aren't the major teaching centers. We're not going to replace the major teaching centers, but what you are going to see is a lot more 100, 150 size hospitals out in the suburbs where people live. So you're going to see more and more hospitals. You're going to see more and more hospitals having to upgrade their current facilities.
Ed, that means more acquisitions, more upgrades, more new development. How are the capital markets responding?
Yeah, the capital markets have been great for us. We've done very, very well in raising equity. We've done very well in raising debt. As you may know, just recently, within the last 2 months, we actually just did a $450 million bond issue. This is an unsecured bond issue. It was the first time we were able to go unsecured, and it actually gave us another access to capital that we've never had before. But every time that we've gone to the market, we've been oversubscribed. The market has said that, hey, you guys have done a very good job at what you've done what you said you were going to do, and they've supported us through debt and through equity. We feel very good about where we are right now to be able to take advantage of all the opportunities that are out there, both on a new development and on an acquisition side.
All right, interesting stuff. Thank you very much for your time, Ed.
Thank you for having me.
For more information on this and other news from REIT Week 2011, check out REIT.com.